Hello everybody, welcome to the morning session in the Bund Future from 9 to 11. Today is Thursday, the 8th of August. As you can see, there was a unusual wide initial balance today. We have more than 50 ticks in the morning already in between 8 and now with the cash open. And prices left and therefore they played my hypo number 2. My hypo 2 was if increasing sell volume into the 89, look for the short with targets 84.79. As you can see here, they increased the sell volume into this level here. You see it increasing, only small little pullback and again increasing and reaching target 1 and target 2. Now you see target 2 even got extended to the downside as they touched then this former level of the day before's low and were first rejected, but now is coming back to the area where at the moment VPOC is built. So we have the situation that now with the open, yet now the price is trying to test this low volume area, getting up higher, and you know this area here is quite confident, separated between those two levels. There are some 2, 3, 4 ticks, the overnight low separation and the 50% of the week. So this is more like a mark where the bigger players say, okay, hey, you know what, that's it, we sold enough, there we are now, maybe too cheap prices, too cheap, and let's go back to this upper distribution. If not, if they say no, we're not too cheap, this around here now is the balanced area, then we're looking now here with rejection signs at this level at the 85, where we at the moment we're looking here then for the range short, yeah, with the targets 79 and then 75. And so this is now my update for the hypos, as I repeat it again, as the pre-market already left the areas of our preparation. And that means new hypos are range levels as we are right now here. When we see here this rejection sign that's starting to appear right now, but we need to see another rejection. Then we look here for the range short. If not, they may try to get up in higher areas. And number 2 is if increasing selling volume into the 176.68, look for the short. You see it here. I mean, with the 68, this is this volume edge from the today's pre-market where it's already made a new low. And if we are getting into increasing selling volume into this level, then we have the chance to get lower to the areas of Tuesdays. So 2 days before Tuesday's distribution, and there's some minor POC. This means target 160 and then also the 53 and the 44. And right now they may playing out this level if they can leave this area here, or if we stay, and then we see now with the rejection the possible range short here. You see now they're trying to expand this area here from this higher volume edge, the open high. We see that they collect pieces and now filling out this empty area. And we're about to arrive the next edge of this before balanced area, this balanced area from 93 to 02. So that means prices need to find acceptance above this 93 area, and then we have a chance with re-entering an ongoing absorption or buying volume to reach target then 177.02. Now they fight for re-entering this area. They made some attempt on the buy side, have some little rejection. We're staying now within, and we want to see that this area here at 91, 92 finds some absorption, and then active power and will of buyers again. If they can now increase buy volume and get into and stay here around this area, then we have the probability that the prices fill again and look for acceptance in this former pre-market balanced area with the targets around this 99 to 02 level. When they start with the impulse phase and taken out, if they taken out then the high around the 96, 97 with power and buying, then it's time to move the stop. For me, not before, because right now they're just fighting about this level, and both sides could win. That means if the buyers fail, we will see prices falling back, and we will test them. May test back at the moment POC at 86, or if the buyer win, we take out impulse phase 1 and getting and filling out this balanced former area. That's also possible, and then we will see we have a higher advantage or a good advantage on our side for this long here with targets around 99 to 02, and right now they still fight for it. There's even some liquidity now at the 95, so ask is a little bit blocking, not too huge, but that's just a moment where we are not of control right now of this trade.
So that's okay. That's what we need to accept. Then this is the phase where both sides could win, but at least we see some acceptance within this area. So let's wait. The sellers now making a lot of pressure at this level at the 92. We see also that the sellers push passively as they provide liquidity at the 95, means blocking a little bit this area, and so it's harder for the buyer to get through. So right now it's still not yet played out who will win. Will we re-enter? We have re-entered, but they couldn't not stay into, you see this in Delta, in the buying volume phase, but buyers still defend it. So buyers, there's still some guys who says, no, we are too still too cheap, we can go back and look here for re-entering this balanced area. But there are also the other side, the bears who say, no, we're already too expensive here, and I think it's good to sell. So what else should I say? That's the way it is. And the only thing we could make a decision on based on it was that we see some power in buying here in this moment. We see a pullback, we see some holding, we see a second attempt. So they at least decided to take on and accumulate some longs. That's why I made then this decision here to go with the trade with a little bit higher advantage on my side. And now I'm out of this trade. I got stopped out because the buyers couldn't hold on. Now switch to the other scenario. When they are not able to get into this area, we then may see that prices coming back to test here if the price is fair, auction theory at the 86 and even lower with the 84. This would be then the edge, but 86 to 84. I'm not in the short because when I enter now at this level, I would only have a 3-4 ticks reward, and on the other side one must need accept a stop of 6-7 ticks because prices are not in danger. The range short would not be in danger as long as it stays here below the at the moment extreme high. So this is then just no trade. First trade I made here just didn't work out, but only small risk. May you have traded it as well, or may you waited more for the short. Either way, if you took this trade now and sitting now in the short, you can wait, you have to wait and be patient that they reach at least target 186 and have to accept that as long as it stays in this area and see again and responsive selling, don't stop yourself out here because it's still then possible they tested again the high and then taken on a second try. And if you took the long like I did and had your triggers and knew that in auction theory what could be played and see also the attempts here and see the real attempts of the buyers, then everything is okay. If you then here got stopped out, and if you feel some pain, some frustration may now appear in your mind and you see you're a little bit more nervous and bounce on your chair, you have to tell yourself that's okay. That's just the old behavioral patterns. They want to protect you from loss, from a pain, and provide you a lot of pain because you've lost something and you've lost money. And the only thing is, it's not to fight this, but to find acceptance just for it. Okay, now they test now remember what I said. That's why I said I don't want to be in the short at this level here. This would be too expensive. Where we're at now, this is a much better level now for the short. And if we see really at a responsive selling, then this is a good level. But take a look what happened. So long try number 1 and 2 failed at this moment when they then really gave up their positions, and then you see short coming in, but the short already stopped at the VWAP. And the VWAP at this moment was used to get in again with the long. That means, okay, the buyer didn't give up. The buyers wasn't able to get within this balanced area at this moment because for some reason sellers were stronger, but the range short, the possible, didn't reach the target 1 or 2, but they already took the VWAP as getting into new longs. So at this moment when I said this, this was some kind of little bit dangerous to took on here the short, because now you would be stopped out on the other side again. And see now what this means. I didn't take the short, but remember now when we look at yesterday or the day before and see how market runs, see the difference today. Market is a little bit more blurred. So that means, as Matthias already wrote in the chat, the trader don't know exactly what to do today because we are somewhere in the no man's land here. We're not in the stronger part, here. We're not here within the yesterday value. You see this here in this upper region. We left this value. We now tested the overnight low. We even made it below the overnight low. Now we're using overnight low and the VWAP again as a pullback level, trying to get back in this more neutral to bullish area. We were for a short period below. Well, they don't know what to do. That means if you don't know, just imagine, if you don't know exactly what to do, if you don't have this clear marks and levels where you know when I push and concentrate, for example, my buy power, and you know everybody sees this. This is an open system. What you think, what would you expect? You know that may other people see this as well. So you know that means that you can be a little bit more confident in collecting or accumulate pieces in an area of interest because may other will do the same. You can also know that the other people who wait for the opposite side, for the short at this area, not for the long, they will look for some signs, oh, that could be maybe a short. Then you can trigger those because you say, I start with some first buying wave and people, oh wow, okay, now buying stops, okay, seeing price falling back, people going into short, you collect the shorts, boom, and long increases again. So you mean, what I want to tell you is, the more clear the marks and levels are, the more clearer we are then in a situation where more confident will match with other confidence, and also the other side, the level 2, the other side, the traders who wait for the opposite direction. And we don't have this today. So you see, it's not so clear, it's more blurred, the picture. We see some more sticks up and down, and you see it here and here and here, and so it's not so clear. That means for me now, I said, okay, number 1, a lucrative trade, but didn't work out. I got stopped out because some kind of volatility that normally doesn't appear in the Bund led to a falling back, to call it, let's see what happening here level. Are there buyers? Are we really interested in buying, not only here but here? And then they started buying here. So it was like, I'm not confident enough. There are people want to sell. Okay, so this was not clear. And for me now, so the recap or what at the end, what's the impact of this observations to my following trading today? This is very simple. I will be very, I will stay very, I will not risk too much today. That means I will not take on plays that not having a supreme risk reward, as I know that days like today may lead to prices not reaching their targets because of a lack of confidence, of a lack of trader that can control their trading within only the clear levels. And that's the way it is. We now filling out this lower volume area of the pre-market. That means if we draw the volume from left to the right to complete and see how the volume is now look like, then we see, okay, interesting, we're now within this upper distribution. Oh, it looks still looking blurred. So there's still this gap here in the middle where we try to find acceptance. When we came back into the more important 92, 93 level, they played the lower edge. You see this here. This was at this moment I said, we see our low volume node, okay, and we see, okay, that's why I maybe got stopped out. See this here, there's the more important lower volume node with pullback and also clustered with the VWAP in overnight. Whoa, I didn't see that, wow, okay, there was a more clear separation, low volume node, so this was even more reasonable, all right. Anyway, it's blurred, and I will wait for a more normal distribution profile to then go for a range trade. As long as it's so blurred and we have no normal distribution and some more trading control back, I will not take on then a trade. So let the market play it out and fight, and then when they find acceptance and we have more normal distribution, we will go back and look for a good lucrative trade again. So prices are back in this upper region. You see that the 93 now is a kind of edge, and also the 90 area. So we have not reached yet the O2 level, the 177.02, but at least prices are back above overnight low, above this bigger volume load, above the 50% week, of course, as well. We have some schools on the upside. That means we have even some bullish imbalance. That means a little bit advantage now for the long side, that we may see this prices at the 02, 03 level, and maybe a few ticks more. And this would be cool then if we reach this level and then see maybe some more balanced phase. And that's what they look right now. A little bit still for the upside. You see prices didn't get lower than the 94, 95. That means the selling that took place in this moment when they take profits, but then also attempt here to the downside was a kind of absorbed wonderful here at the 95 level. They provided some liquidity, and all the selling was almost completely absorbed. And it wasn't less. It was about 1,000, more than 1,000 contracts got sold into this level, and only one got lower at the 94, but there was only one contract. And then you see only one contract selling into this, what got absorbed, and then at 9:30 they already started with more taken out again, the shorts, and then some buying came in again. So right now we see some kind of bullish imbalance, and also acceptance of prices around the 97 area. Okay, guys, we still having this very bullish imbalance here, and that means as they absorb it, absorb, now we see more buying, okay? At this moment here, they started now more to buy, but we also see absorption at the 98 and the 1999 level. So it's just feeling comfortable prices to now at this area. It's a very, very tiny, very wedged consolidation, and it's nothing here to trade for a short or a long. A possibility to trade for the long would be at the moment, again, when we see that we are back in a balanced mode, because I would neither go for a long trade right now from here, because what would be the expectation then? If they are able to break the structure with a lot of volume, there's only already the next PSC and volume edge separation area at 03 level, 02. So I would go there with a lot of confidence. And as we are at the middle of nowhere, there's also no area where the other time frame trader may be there, huge and big. So be careful. I'm telling this only for myself. For me, I will not look there for trades. I will see some repaired profile, I will see some balance, and there's only more action at this lower region when they take out the 68, then we may look for the short. And for the long side, for me, there's nothing. I would only go then for the range, long or short, but only if we have some normal distribution. If we see then, if they take out the long, we will find some acceptance. We will see then they take out the long, that we see some prices too expensive, and then they fill out, and then we may get a double top or a bottom, or it's just a range trading. But no trades. There are no other. I don't see any other trades here. Okay, you can see now they reached the target. It means we're reaching the higher volume edge from this accepted balance. Now we see this is accepted now, this area here, where we re-entered this level from here to here, from the pre-market, and it's accepted at the O2. And I just made my analysis from my trade. I will show you because I think this is interesting. I also draw the at the moment volume profile when I made my trade decision. With the increase of volume, this was my trigger into this volume edge at 93, pulling back, holding, and again increase of volume. I decided to then enter at a cheap level at the 94. So this is only one tick above the edge. I made my stop rule when we re-enter a balanced area and create a LVN on the way up. I use the LVN. And normally, or I try to, when I make my observations, I try to use the more significant LVN and 1 or 2 tick below, at the long scenario, for my stop. And I think now as I checked it again, I made some failure in my preparation for this trade. So that means I was not totally clear in my mind before I executed. Because I have written down for this play the rule of the low volume node or the volume edge, always take the lower, the more significant, where everything happened. And please take a look. You see this red greenish area from this drawn volume profile at the moment when I made my trade decision. You see this was the open range. We accumulated this volume, absorption accumulated, and then we left this normal, small normal distribution with a 1 and 2 step as dipping into this acceptance area. Where I said when we see increasing volume back to it, we have the good advantage, the edge on our side to see prices may then test the pre-market, this pre-market POC and higher volume edge at the O2 level. So we re-entered, I opened, and now I took this little LVN from this short time frame. I took this LVN and put my stop 1, 2 ticks below. You see this here. What I haven't seen, maybe I was too fixed on this focus to only on this level. I have overseen that the more significant low volume node at this moment was the 89 level, because see, this is when we left the normal distribution. So, and also see, this is a clustered, this is clustered with the overnight low at the moment VWAP, and also this is the separation from the pre-market, the more significant. I think you will agree, this is more significant LVN than this is. And that means I took the wrong stop, because when I enter here, this would be logical to allow prices coming back at least or 1 tick lower to this low volume node. That means in this situation, I would have needed at least a stop from not 4, but at least 6 to 7 ticks. And then one need to calculate, is then this trade worth to trade from the 93 area? Even yes, it would have, because for me, better than 1-to-1 risk reward from 93, 94 to 02, this is 8 ticks chance and a 6-7 tick risk. So this is okay for me. So now I rated this trade again, and it's not a lucrative, but a lousy, because it's a rule violation to make your stop not at the proper risk. That means I was stopped out, but it's a difference. The mistake I made wasn't made at the management phase, and this makes a huge difference. Is it made in the execution phase, means in the planning and then trade execution, or is it made in the management phase of the trade? It means managing the stop and the target, because there's more emotional pain and there's a higher failure rate if you're not in control of your management phase, what is higher probability, because this is more complicated than the execution phase. But this time, and I can't remember make a mistake with the execution phase, so this is maybe 1 out of 50 trades. Anyway, this time I made it. So this was just a mistake, that's okay. I'm not angry at myself, maybe a little bit, but I know I find acceptance for this. So I did not take the right risk for this trade here, because risk should have been below this 89, should have been at 88, 87. So then one can decide to not take the trade here. Yeah, okay, maybe it runs then away and you're not in the trade, or you extend your stop, or you wait and wait for a cheaper price entry and wait till they play it out. So I made the wrong execution, was in the execution phase the wrong decision to put my stop here at the 90 orientation at this low volume node at 92, but at the 89 this was the right level. So I just wanted to tell you how to analyze. I analyzed then my trade at this time. So this was a lousy trade, and I will put this into my statistics here for this trade today, re-entering the balanced area. So this was not played right, failure, mistake in the execution. All right, and back at the market, you see now we tested this, we reached the target at 02. That means we see then that they now having some kind of more normal distribution could be built now. Still a little bit skews to the upside, still a little bit of bullish imbalance, but you see already that if we are around making the POC around here, that we are maybe about to bring back in control and build a normal distribution. So we wait now. All right, they're looking still for a little bit higher prices. We are in between this overnight area, still in between seeing this distribution. They may see and may touch even and look a little bit lower, higher to this volume edge of this distribution. So this means there's some separation, some some low volume node at the 10 level, short to the overnight high. There's a volume edge at the 08, 07 level. So may they test it. And this would be good then, because then we would see that this profile is about to be repaired. We have the normal skewish situation, but we have then more a normal distribution that could be filled out. And then we may look for a balanced market. And if there are enough traders in it, we don't know. We will see. If it's too tight, we're not trading. But if it's okay and it's a good range with a proper risk reward, we can then look for range traders. And right now, but as you see here right now, there's nothing to do. They just repair the profile, repair the bullish imbalance. And unfortunately, I made this mistake in my execution phase, as I set the wrong risk when I'm trading this long here, as it then finally, of course, then reached my targets because the trigger were given, but the risk wasn't measured wrong. Anyway, we wait now. Okay, I think this was interesting right now. I just remembered on a video I watched a few months ago, and there was a statement of James Dalton, of Jim Dalton, and it may help you as well to understand how market and advertising of prices in the economy works. So you can also transfer this, of course, onto trading. And as this already happened maybe 20, 30 years ago when Peter Steidelmeier and then James Dalton, when they were talking the first time about market profile, that the thing is that price, when trader or the retail traders are trading, or I say rookie traders are trading the market, or even advanced traders, they at the beginning they only looking at the price and they trade most likely the price. That means they don't know this macroeconomic rule that of course prices always advertising in both direction. That doesn't mean that you are right. Well, price started to advertise. So this is happening very often at the beginning when you see that always people trying to buy when a trend is about to start. They see it starting and push prices higher, and then they buy. And they buy most often on the long side at the top, or they buy at the bottom when they're on the short side. So there's this so-called trader. When I watched the video from Bernie Man for the description of auction theory, they called him the top tick Tommy, because he was always buying at the top and selling at the short. And they just make the opposite, because they just sell then when he was buying and they bought when he was selling. And this is when you understand the mechanism of auction theory. And doesn't matter what kind of auction this is, if it's futures, if it's in a free market when you're selling phones or smartphones or tablets or whatever. And it's always the same, that price is just advertises. Price just advertises all opportunity. That means the price is just an instrument for advertising. The price is an instrument for advertising mechanism. Price just advertises for all opportunities. But then came market profile. They're thinking of market profile with the distribution curves, and statistics, and say, let's switch it from vertical to the horizontal edge, put this distribution curve on the left side, and build and measure measuring with time how price advertises, and if it becomes then an opportunity. So price advertises all opportunity, but time then regulates that opportunity. That means if time confirming a level for some period, Steidelmeier, Dalton, they took this 30-minute time frame, and advertising this time, and time regulates that and stays confirming this, then you have some advantage to see, okay, there is a phase of accumulation and we see an edge where this is happening. You see low, cheap, expensive and fair price areas. And then volume profile came at last. And volume is the third thing. Volume measures the success or failure of those opportunities. And this was a statement. Exactly, this was the statement quote from James Dalton in this video. This was at the Trailer Expo, I think, many years ago, when he just said, clear, price is an advertising mechanism. Price advertises all opportunity. Time regulates that opportunity, and volume measures the success or failure of these opportunities. And if you take it this way, you can see it, for example, in this moment, in this situation. As you see that the volume was built, first we got the time. You see prices staying above, pulling back, and then staying above, this area where this formal volume edge at the day moment volume profile was. That means starting at 9:50 and prices confirms this for 10 minutes, and also a little bit of volume was built here. And then we see that we even make a new high testing was about to test the overnight high. And you see now we have time measures and regulates this opportunity from 10 o'clock to 10, let's say 10:15. But you also now seeing how successful this by time regulates opportunity is by the volume. And you see the volume that was built in these regions here wasn't that strong as it was before. And when we draw the at the moment volume profile to this moment and seeing that they build a little bit volume for some period of time, and then when you watch at this till 10:15, that it was more blurred, that we see there was only a peak of volume at this area at 10, but less volume at this area at this, then you see you have an edge when we see that we're leaving this area. You have then an edge and see as we are about to put more pressure to the downside, and you were standing maybe here with a short sell, a sell stop, or want to sell the situation, and you see you have now an advantage on your side because the volume did not confirm this highest area of the at the moment day high, and that means there was more a risk of failure of going on more in the long. This is what, for me, what Jim Dalton means. That means prices advertises all opportunities. Time then measures. Price advertises for higher. That says this is not fair anymore. This is too cheap. This price is too cheap. Advertises for higher. Pulling back confirmed. People buying again. People buying again. Now time regulates this opportunity. Time regulates the opportunity. And volume measures the success or failure. And you see volume tells us we stay here with time, and then you see increase of volume again from this area. Still too cheap. Increase of volume again at this area, but now at this highest level. Look, time, okay, gives us a same, regulates it, but look at volume, how this has changed in this balance area from here to here. I will draw it. Volume, time, measurement, volume, time, measurement, volume. Look at the difference. Volume measures and tells us when we reached the third, sorry, I should paint it the right way, because if not, then it's worthless. So volume here, when we get to this, say, okay, this is still too cheap. We see now, okay, we accept this first, but with the second touchdown, you see volume, no, this measures, no, I don't want to stay here, failure. At this moment, you know, as we are at the high of the day, as we are at the high edge of a distribution, as we have not anymore, no more, you see this, it's not more, no more a skewed profile, there is no bullish and no bearish imbalance, as it's more a normal distribution who is about to get filled out. You know then from risk reward, you have the chance, if you see this and measuring this, you see, if you're trading this, you have now the chance to get target number 1, the 2 days POC at the 176.97. This will be your target now as you entering, as seeing this failure of the volume, measuring that volume failing here at the low of this balance structure to attract new buyers, but falling down and finally here leaving this area and going back to this balance area. Now the next is this, and this is at the moment POC. So this would be my target number 1. Target number 2 would be around the 94, 95 area, and even can be filled out to the bottom area to 86. But anyway, you see this? How volumes measure after time has regulated, and price is just only the advertising mechanism. And that's the way it is. And we just have to accept that the market, from the macro to the micro level, builds several areas of balanced and imbalanced, and balanced and imbalanced scenarios. And your edge at this moment here, when you recognize this balanced phase here, and measuring volume, seeing a delta divergence, seeing it cannot make the high anymore, different to this situation where we see when we touch down, we stay in flow, we stay at least neutral, and then again volume, we stay at least neutral, and then again volume, we stay at least neutral, but no more volume. Structure broken. And at this moment, you can say, okay, no matter what happened, they can absorb, it can still stay in this balance. That doesn't mean that it's over at the end. This is not the end, but it's just an edge and an advantage. And at the moment, you can say confident, if you develop then also a play for risk, for your entry and stop management, you can say, just at this moment, I have an advantage. There's now I say the price will go and test the at the moment VPOC again. And I think this is some basic where you have to absolutely become good. This is only, of course, I notice the technical side, and you see this, even if you know the technical side as I do, today I wasn't able to make money out of this good trade because I treated my stop wrong. But I tell you, I'm working on this as everybody, but a difference maybe to other traders, I'm not in trouble to losing money anymore. I can stay stable with my account and being consistent, profitable also means staying in your account without losing money and staying in the green numbers and being also in control of your trading and working on your mindset. And you see, even I have to work as doing this for 2.5 years. Or even I'm working again and again on my technical skills. But you see, now we're reaching the target, and this is also important. So I will tell you the most important thing, the biggest. I jumped to success from the technical side. The biggest jump I made when I was starting to learn the mechanism of markets, working with the market, with the auction theory, and with volume profile. And of course, as basic, you need to understand the best basics book is Peter Steinemeyer on markets, or Jim Dalton with market profile. This is the basic, and you should understand this. Please, all this other stuff. I made this exam in the German Eurex at the Eurex, and you learn so much shit and calculation and mathematics and option theory and Nobel Prize mathematics shit. But the most important thing for my practical skills and trading from the technical side, only from the technical, not from the mindset, this is auction theory, volume profile, market profile. If you understand the mechanism of markets and then be able to get a clear mindset, get your mind under control, well, I would definitely recommend to spend a lot of work, because this will take some time. This will take some time, and it's not without reason that so many people fail in their trading. So I hope that this given you some little advantage. I hope so. And if not, you better may think of not wasting your time to become a trader if you're not happy with this theory, with these feelings. And that's okay if you don't interested and say, I don't care all these numbers and theory and statistics, and I'm also not wanna create new behavioral patterns. Please don't come me with new behavioral patterns. That's totally okay. You don't have to. That's absolutely okay. But I will tell you, and I will just protect you to lose a lot of money. Then don't expect what everybody from this entertainment trading YouTube guys tell you. Don't expect to make a lot of money in trading. You will lose. You just will lose money. You have to become technical and expert. I would say right now, market profile, volume profile, and most of all, auction theory. Of course, a little bit reading the tape, knowing what's delta and order flow. But you can do this, and it maybe takes a few months, But it will not take years. It will take a few months to get the technical understanding. Then it will take maybe 1 to 2 years to adaptive to the market you want to trade, to find out, do I want to trade the liquid or illiquid market? And then you have to develop your trading mindset. And it's just work. But it's a little bit more harder work than maybe in another job where you only have to develop your technical skills for your job. In trading, you have to test your inner self and you have to get known of your inner self, which is sometimes a little bit pain, yeah? And it's not easy to work some things out, but it's possible. It's possible when you want to go this way. All right. So you guys seeing the profiles getting repaired. Auction theory again. This is the value of today. We're seeing the computed value area high of today around the 03. The computed value area low around the 90. And price is just running through. After volume measured a less unsuccessful higher at the overnight high and seeing them breaking the structure and reaching target 197, about to reach target number 2, the 90 area. And now we're at the separation level. That means here we want to look for rejection in the volume. That means selling, get absorbed, and then start selling stops, and rejection, doubled rejection. And I will look here for this will be then the range long trade, which with the target about 97. So this is about then a 4-tick stop trade. That means you could look for a cheap entry around the 91, 92 area and have your stop around the 87, because this is the separation, lower volume node, this is the overnight low. And we will take on this trade just with the edge of knowing this is the value area low, this is the separation of volume, this is where the long started, This is our lower volume node. This is our action. And here we want to see the responsive buying. If we don't see our trigger, if we don't see our responsive buying and the amount we want to see it, then this is no trade. And no trade means staying flat. and watching the market now as a little bit as a car that is running out of gas. It's not having enough power, not enough munition, not enough armor in your weapon to reach the short-term targets. So I saw the rejection signs here. I entered at the 93. My target is at the 97, so that means this is just a 1-1 risk reward. This is the minimum I want to have. And the short-term target, of course, is the 97. I'm still in this trade. My stop is now very tight at the 92 level. So that means we saw not one, but 2 attempts on the upside. And they couldn't take out the high yet. So for me, now I don't want to risk too much, as price may advertise then for lower regions. That mean my stop is very tight at the 92 level. And that's it then. If this would be then my second and only and last trade for today, if I got stopped out, would just happen at this moment, because they could not just reach this price. You see, volume tried it 2 times in this scenario, 1 and 2, but they could not just take out this high, this 96 area. And now you see, if in delta structure it's even a little bit lower, that means the people that were trapped, of course, in this position now, they pulled their stop, and that's it. For me then, there is a lousy and a lucrative trade today. My second trade was the lucrative. It was well traded with a good risk reward, but you can see here that it failed 2 times to reach my target. And for that I made the decision then, because the market was too weak for me then to tight my stop, which I'm allowed after 2 impulse phases of trying to getting out of the microstructure to the target. Then I'm allowed, this is my rule, to move the stop tighter with 2 steps. Step 1 is from the first stop to -3 and 2 area, and after the second impulse phase, if it's the second impulse phase but not able to take it out, then I move my stop to on scratch or -1 about. So roundabout on scratch on at the entry level. You see this here. So this is the time I gave the trade to unfold. And impulse phase 2 started, and unfortunately you see that it was so weak, and now I would have been filled and reached my target, but unfortunately this is happening now with the 3rd attempt. So that means buyers coming back after closing some trades, they coming back here and now pushing it higher. So no matter what, that's it for me today, because market now is too weak to reach its target and takes so long, it takes too much time, and this is not fits to my play, because my play is for normal volatility, and this very slow volatility, if you want to trade it, then you may need to develop a play where you give it more space to unfold, or you just let it be and don't trade. So that's everything you can do. As it's now almost 11 o'clock, I will end then this session. I think such a lot of information today, very interesting, as the pre-market already played my hypo and left the activity level where I provided my hypos. So we had to make some adjustment and make new hypos, like we did then in the morning, where I said before the market starts, then I said, okay, we have new levels, range levels, 176.85 for short if we see responsive selling, or we have increasing selling volume into the 176.68, and this was then not played. That means the short side wasn't played. Then we didn't see the responsive selling. You see this here, no responsive selling at the top, but acceptance by price and volume measures successful. We got out, and I then played the re-enter into the higher in the former distribution, where I made a mistake in my execution, not management, but execution phase, where I was orienting on the LVN that was at the moment at 92, and I put my stop, as you know, 2 ticks below the activity level to give it some space. But the more interesting, you see this then later here, the more interesting, I'll get back, you see, I orientated on this LVN here at the 91, 92 level and put my stop 2 ticks below. But the more interesting level was at the 89, because this was the separation low volume node of the trying on building buy volume and buy interest separates, and you see they tested it back. It also was clustered with the, at the moment, VWAP and the overnight low. So there was an execution planning mistake in my trade. It would have worked out because my target, as I said in the stream, was the pre-market POC at the 02, and you see they filled out this distribution, they reached 02, and so there was a lousy trade in my execution phase. And here we have a lucrative trade, but due to the late time of the morning, there wasn't enough power, and even 1 and 2 and almost 3 attempts on the upside could not take out this micro target area. 96 where my target was, sorry, at 97 there was my target, and it wasn't filled. So I decided then, after this two and a half attempts on the upside, as people then going out of the longs, you see this here in delta, to before move my stop to entry level or give it a 1 tick at least, and then I was stopped out. So lucrative trade, but no profit, and a 1 lousy trade with -4 means for me today 1 lucrative and 4 before 1 lousy trade with -5. So what my goal is to not having any lousy trades anymore, and this is what I'm training with my psychological mindset journal and everything, and I'm about to get better and better, because my lousy trade rate is less than 20% of my trades. Goal is definitely to stay within 10%. That means I want to have 90% lucrative trade. That means I want to have myself complete in control. And this is the only way then you can make money. If you cannot control the things you can control in trading, then you will lose money. You see this today. When I would trade it right, then this would have become a 8 ticks plus trade. This would be a -1. So you see how it switched everything. Then we go into +7 ticks with 1 target. If you trade 10 targets or more, whatever then. But you have then 7 ticks plus. And I made almost everything right. I made everything right with the second, but made a small mistake technically in the execution phase. Emotionally in the execution phase with the first trade. Now my overall P&L for today is -5. -5, and the other would be +7. You see what this small adjustment makes? So mindset and technically, and that's how complicated trading can be, because normally rational, it's so simple. And to get better, there's for me only the one thing: to measure what I'm doing, to say, okay, later, I now still am I in control? Do I have enough lucrative trades, or do I still have some lousy? And so today I see the result, and that's totally okay, because then I know I'm at the total right way to know lucrative trades. This is my target. I know how to play it. I know the market. And the only thing is, it's so good feeling. I know that I can control to get better and get more lucrative trades. And then automatically you will have a account and capital that rises. Thank you for watching. This was the Thursday session of Bund from 9 to 11 on August the 8th for Monopoly Trading. Until Thank you for watching.